is a time of fiscal reckoning for Chicago. The Windy City has been shortchanging workers' pension funds for years and now has a deficit of $20 billion. Over the past decade, Chicago has put $7.3 billion less into the pension funds than actuaries recommended. That is pushing up its bills. This mounting debt led Moody's to lower its rating to 3 levels below investment grade. And of course, that had a ripple effect on Chicago muni bonds. Joining me now is Kate Smith, Bloomberg's muni bond reporter. And Kate, Rahm Emanuel, the mayor, needs to come up with some ideas, but his options are pretty limited.
Yeah, they're getting really limited and fewer by the day. So his first move was obviously to go to the state and see if they could do pension reform. That was a big, fat no from the state. And that was actually when you saw that Moody's downgrade trigger. So that was what you saw there. And now what he's doing, he's actually holding like campfire meetings with residents, trying to figure out, I think it's more of trying to explain really the situation that they're in. So, next year when they see that perhaps their kid's bus route is cut or something like that, they know what's going on. So he started that series off last night.
So it's not so much brainstorming as it is trying to explain a mea culpa, if anything. What's the tenor like? I imagine the anger there is pretty vicious.
Yeah, it's not good, to be honest. We had a reporter actually at the meeting, Elizabeth Campbell, and she was telling me that it's just, people are not happy. They're chanting, they're booing. I mean, this is really, it's a dire situation because these are essential services that just have to get cut. They're staring at a $500 million budget cut with virtually nothing to do.
Okay, well, of course, this means some kind of reform is necessary. Is there a way to implement pension reform? Because some other states, Rhode Island, right, even New Jersey, seem to have done that successfully. Is that a model for Chicago?
It doesn't seem like it's going to be honest. So they attempted, like I mentioned, so they went up to the state, and the state said no. And that also means that no one in Illinois can adjust their pension, because Illinois itself has a terrible pension problem as well. It's not just Chicago. So it doesn't seem like they're going to get any relief from that because it's already been appealed. It's looking like a no.
Okay, so what are the options at the end of the day for Rahm Emanuel? What can they do now? What can he do now to raise this much-needed cash?
It seems like his only two options right now are either raising taxes by quite a bit to kind of start to close that budget, or you can cut spending. And, as you're seeing from these campfire meetings, cutting spending isn't really getting met with, a friendly face, right? So it's looking like taxes. But something too important to remember about raising taxes is Chicago is a very viable city, and once you start raising taxes to very high levels, you're really threatening that.
Right.
So there's a very fine line that he has to make sure.
The competitiveness of the city goes down compared to other cities.
Exactly.
Well, what about market access? Can he tap the capital markets? The Fed perhaps will raise interest rates in September, but for now, rates are still very low, and therefore Chicago should be able to borrow money very cheaply.
So it doesn't seem like that's going to be an option either here. They're really completely out of options. So once they got downgraded, these public schools attempted to tap the market. The market kind of stood back and said, we're not so sure about this. It got delayed for, I think, almost 3 weeks, and then it came extremely expensive. So now they're waiting until the end of September. That's when the mayor has to kind of come up with a spending plan. Sounds like the market is they really want to wait to see what their plan is first before they just borrow money.
Okay.